all you need to know about incorporating a private limited company. What is a private limited company? A private limited company is one of the most preferred types of business entities predominantly prevailing in India. The reason behind is that a private limited company will have more privileges that would encourage the startups to have a concrete business structure. A private limited company is monitored by Register of Companies, regulated by Ministry of Corporate Affairs by abiding the provisions or rules and guidance of the Companies Act 2013. Now let's see the advantages of private limited company. Since there is a centralized regulatory body and it is monitored by the central government, credibility of your business increases. Save the owners from risk and losses and ensure safety on the personal assets. Since the company will be considered as the separate legal entity different from its members, there will be safety on the personal assets of the members or directors to maximum extent. Most attractive business structure for the investors, as there is enhanced credibility and the business structure will be in an organized manner with the proper internal control and process flow. The investors will be attracted easily and you can get more capital and recognition for your company. High potential to expand in short span, as the business will run in an organized manner and you can approach the investors globally. The possibilities of expanding in short span is quite high when compared to other entity types. Enables to perform globally. Private limited will have easy global recognition and can do business anywhere in the world, as there are rules and guidance for every transaction of a private limited company. Perpetual existence. Since the private limited company is a separate legal entity from its members, it will exist perpetually irrespective of the existence of the members. Hence it is said, people may come and go, but the company goes on forever. Ease in transfer of ownership. Ownership can be transferred by following a minimum procedure without any complications. Hence, whenever members are not able to continue to carrying on the business, it can just be transferred to the interested members. Improves reliability and trustworthiness. The private limited company is bound to declare every transaction or event to the ROC and other tax authorities. There is transparency in their business and the reliability and trustworthiness improves as they comply with the rules and regulations of various laws of the nations. Attracts quality employees from the job market. Any employee would want to work in a corporate environment in order to scale up their career growth. Hence, employee will prefer a private limited company to work on when compared to other entity types. Now let's see the prerequisites for incorporating a private limited company. Unique name. You are required to ensure that the company name that you propose to form should not be similar to any of the existing company either phonetically or in spelling. Also, you should remember that there should not be any trademark on the name that you choose. There are certain other criteria which will be followed by the department while they approve your company's proposed name. Hence, any name approval will be subject to the decision of the departmental authority. Minimum 2 shareholders and 2 directors. A private limited company should have minimum 2 shareholders and 2 directors. The shareholder and director need not necessarily be the same person. You should also be aware that only to a maximum of 3 directors will be allowed in the application. In case new DIN is being applied, we need to know the difference between a shareholder and a director before we go for the incorporation. Shareholders are the owners of the company, whereas directors are the employees or managers of the company. Shareholders can be any individual, firm, LLP, company or any other artificial person, whereas directors can be only an individual. Shareholders will be involved only in case if their approval is mandatory and most important decision like alteration of MOA and AOA, declaration of dividend, approval of financials, etc. Whereas directors are involved in day-to-day functioning and management, making effective and timely decision in order to protect the interest of the shareholders and company, ensuring all legal compliances. Shareholders receive dividend, whereas directors will receive salary or remuneration or sitting fee. Registered office address. You can have your office anywhere in India. If your office is a rental property or owned by the proposed director, in that case, you need to get a rental agreement in company's proposed name along with the no objection certificate, shortly we call it as NOC, from the landlord is required. You will have to keep in mind that the government fees, stamp duties will vary from state to state. Capital requirement. There is no minimum or maximum limit for paid up capital for a private limited company. You can bring any amount as paid up capital. But the thing is, the mentioned amount should be deposited in the company's current account after incorporation. You must also be aware that the authorized capital should be minimum of Rs 1 lakh and the government fees. The stamp duty varies as per the authorized capital. Now let's see the difference between authorized capital and paid up capital. Authorized is the maximum capital that the company is allowed to issue. Paid up capital is a portion of the authorized capital that the shareholders pay for acquiring the shares in the company. Authorized capital will not be considered while calculating company's net worth, whereas paid up capital will be considered while calculating company's net worth. And also it is used to cover business expenses. Business objective. You should have a defined business idea in your mind, which shall be replicated in words in precise manner. You cannot have a multiple line of business at the instant of incorporation. Now let's see the document requirement for incorporating a private limited company. ID and address proof of shareholders and directors. PAN card, Aadhaar card, voter ID, driving license, passport. You can use any of this as ID and address proof. Passport size photo, electricity bill, recent 1 month bank statement. For company's address proof, rental agreement, no objection certificate, electricity bill. Even the property is owned by the proposed director, we still need the same. If in case you have one NRI or foreign national as your partner to be introduced as shareholder or director, then all the above listed documents shall be notarized and apostilled. When you are ready with all your documents, ensuring your prerequisites, the process for incorporation shall be kick-started. Step 1. Apply for Digital Signature Certificate. Shortly we call it as DSC. DSC is nothing but a digitalized signature of the shareholders or directors, which is encoded into a USB token with proper encryption. Without DSC, one cannot apply or file any forms with the Registrar of Company and Ministry of Corporate Affairs, who is the authority to approve the incorporation of the company. Step 2. Directors Identification Number DIN application. Once DSC is obtained, it will facilitate to submit the application and forms online to the ROC. The proposed director will have to provide the consents to act as director of the proposed company and shall also declare that they are not disqualified from being appointed as the directors. Step 3. Checking the name availability. The name should be distinct and shall not reflect any similarity to any of the existing companies and shall also not be similar to any trademark applied or registered names. In case if it is not unique, then name run process should be followed, where a separate application for name to be applied. 2 names shall be suggested in the first application, and in case if it is sent for resubmission, 2 more names shall be applied for. Hence, in one single application, 4 names can be tried. This will be charged additionally as this is an additional process, and also government fee will be applicable. Step 4. Documentation. MOA and AOA and other documents drafting. There are number of documents required for the purpose of filling the incorporation application, and it includes drafting of Memorandum of Association and Articles of Association. Each of these documents will be verified by a chartered accountant before filing. What is this MOA and AOA? Memorandum of Association is a document that contains all the fundamental information, whereas Articles of Association is a document containing all the rules and regulations that governs the company. MOA contains the powers and objects of the company, whereas AOA contains the rules of the company. MOA is the subordinate to the Companies Act, whereas AOA is the subordinate to the memorandum. A memorandum must contain 6 clauses, whereas articles can be drafted as per the choice of the company. MOA defines the relation between company and outsider, whereas AOA regulates the relationship between company and its member and also between the members. Any act done beyond the scope of MOA will be absolutely void, whereas any act done beyond the scope of AOA can be ratified by shareholders. Step 5. Filing of SPICE Plus form. Once all the set of documents are ready, application for incorporation in the form SPICE Plus will be submitted, along with the DSC of the shareholders and directors, and the chartered accountant for seeking approval from the Registrar of Companies. Step 6. Incorporation certificate with PAN and TAN. On approval of the submission form, incorporation certificate will be issued specifying the allotted PAN and TAN. The certificate will have the SIN, Corporate Identification Number, which is the registration number as per the records of Ministry of Corporate Affairs. Our pricing. We offer a nominal price for incorporation when compared to the market, without compromising any quality on the service. Also, we are offering the DSC for 2 directors as complimentary when you avail the post-incorporation compliance services with us. As you must know that there are number of compliances to be followed as a private limited company, which will include the following: INC 20A, commencement of business; Open a current account with a bank. Deposit the paid up capital amount as specified in MOA into the current account. Submit the statement along with the prescribed form INC 20A. Obtain approval for commencement of business from ROC. Within 180 days of incorporation, commencement of business to be obtained. ADT 1 Auditor appointment. Pass a board resolution for appointing the auditor. Intimate the same to the respective auditor. Obtain consent from the auditor for the appointment. Submit this document along with the prescribed form ADT 1 to ROC. Within 30 days of incorporation, appointment of auditor shall be completed. DIR 3 KYC. Every director shall file this KYC every year within 30th of September subsequent to the end of the financial year. Drawing the financials. Balance sheet, statement of profit and loss, and schedules to be drawn and verified by a chartered accountant. Filing of income tax return. Income tax return to be filed within 31st of October subsequent to the end of the financial year. ROC annual return filing. Form AOC 4 financial statement and other documents to be filed with the Register of Companies within 30 days from the date of the AGM. Form MGT 7 7A annual returns to be filed with the Register of Companies within 30 days from the due date for filing the AOC 4. All the above services will be included in our package when you avail the incorporation service along with the annual compliances. For further information, please reach our experts at kanakapalli.com.